Hello, everyone, and welcome out to Maverick Trading's Option Foundations class. Today, we're going to look at unique expiration dates. As always, just a reminder to make sure that you follow your trading plan and that everything we're teaching is designed to be educational and instructive for you. So, when we think about expiration dates, there's a wide variety now. It used to be years ago that we'd only have the monthly expiration, which is on the third Friday. But in the years that have followed, I mean, now there's expirations all over the place. So we want to explore those and kind of talk about the differences. In some cases, you can find almost daily expirations. Now, that's mostly true of your more major index and ETFs. For example, if you pull up SPY, which is the ETF of the S&P 500, you can find a Monday expiration, a Wednesday expiration, a Friday expiration, the following Monday, the Wednesday, the Friday. I mean, almost daily type of expiration dates. Most of the really liquid stocks out there, the most heavily traded and where there's demand for it, they will have weekly expirations. So maybe not daily, they don't have the Mondays and the Wednesdays, but they'll have every Friday expiration. If you go and look at Apple and Google and IBM and so on, they'll have weekly expirations that are every Friday. So this coming Friday, there'll be an expiration, the following Friday. Usually the weekly options are created about 6 weeks in advance. So if this week's weekly were to expire, they would create another one and always keep you with at least 6 weeks in a row. Now, not all stocks have weekly options. If it's a lower volume stock, there's not a lot of demand for the options, then they will not have those weeklies. They will perhaps have monthlies. Not every stock out there even has the monthlies, but most of them do. If it's a big company that's been traded for a while, that's has decent volume, then it'll have the monthly expirations. And this is more considered to be the standard expiration. It's the third Friday of every month. So the third Friday of October is a standard or monthly expiration, the third Friday in November, the third Friday in December, and so forth. Some stocks, and this is usually true again of those indexes, ETFs, and so on, will have quarterly expiration. And the reason they'll create quarterlies is because if you're a fund manager, you get graded on quarterly performance. Now remember, the end of the first quarter is the end of March. So there would be an end of March expiration, right? The very last day in March, the last trading day of March, there would be an expiration. And then the end of the second quarter is 3 months later. So at the end of, so you have the end of March, then you'd have the end of June, then you'd have the end of September and the end of December and so on. And so basically those 4 quarters, you would have an expiration at each of those quarters. And it's the last trading day is when that quarterly expiration. Now, that's not true of most individual stocks. Like, Apple is not going to have quarterlies, but SPY will have quarterlies, QQQ will have quarterlies, and so forth. SPX index options will have a quarterly expiration. And again, that's for those fund managers that want to maybe buy insurance or protection or something like that going into the end of the quarter. They can kind of set things on coast and protect themselves so that they kind of know how they're going to finish and so on. That's why those exist. And then finally, there are long-term options, what we call LEAP options, long-term equity anticipation securities. Any option with an expiration longer than 9 months is considered a LEAPS option. So it's possible you could be in, October of this year and looking out to October of next year. And if there was an expiration, that would be considered a LEAPS option because it's more than 9 months. However, most of the standard LEAPS options have an expiration in January. So if you were to pull up an option chain, you would see a January 2021, a January 2022, a January 2023, and so on. Now, since we're close to January 2021, it's no longer considered a LEAPS option, but that option has probably existed for multiple years. So at one time, it was considered a long-term equity anticipation security. It's no different than any other option. It's just existed for a very long time. But now it's close to expiration, so it's no longer considered a leap. Now it's just, like anything else. But the 2022 options, the 2023 that expire in January, those are leaps options. And again, usually those will land with January expirations. Now, if we were to look at a weekly calendar, you could find that there are some options expiring on Monday, some options expiring on Wednesday, some options expiring on Fridays. If you were to pull up an option chain of SPY, which was the example I gave, you could pull up and it would have a Monday expiration, a Wednesday, a Friday, and so on. And so you'd have so many different choices in terms of your expiration. Now, what's the benefit to that? Well, it just gives you more choices. So if you had something specific that you were trading around, let's say, for example, there was a Fed meeting, and that Fed meeting was going to land on a Wednesday, and it was coming out at 2:00 p.m. Eastern Time. Well, you could trade this Wednesday option, which would exist until the end of that day as an option, right? And it would cover that Fed meeting. And if there was some specific reason for you to trade around that or whatever, you'd have an expiration that's right on that event, that same day expiring option. So if there was some reason, some catalyst, and so on, just gives you more choices and more flexibility in your expiration choices. So some of these options do trade a little bit longer. When you're trading the SPY and the QQQ, you'll notice that the stock market closes and the options market closes, right? So when stocks close at 4 p.m. Eastern Time, options close, and you can't trade your, Bank of America call option past 4:00 p.m. Well, these SPY options will trade even beyond the close. They stay open for an extra 15 minutes. So let's say hypothetically that I own this, Wednesday expiring option, and it's trading on Tuesday. Well, it would trade until 4:15 p.m. If I wanted to buy or sell this call or this put option, I can do it for that extra 15 minutes. Where everything else closes down, this actually continues to trade. And you can watch that. Just pick a day where you have the ability to watch into the close, and you'll see that if you pull up the option chain on some random stock, it'll stop trading. There will be no more activity in its options. Yet SPY, those option prices will keep moving, keep changing for that extra 15 minutes. So something to be aware of there. Again, these are kind of specific to certain stocks, certain indexes, and so forth. Now, when you look at expiration, this would give you kind of an example of a rundown. The first, when you look at a calendar, you can find the third Friday, and that's going to be highlighted. That is your standard expiration. And again, that's the one that's been around forever. Now, there are different types of expirations. There are American style. This is the most common that we trade, and those are stock options. They deliver stock and they exercise or assign stock at expiration. If you're unfamiliar with how options exercise and assign, that's another class. But basically, if an option is in the money and you leave that option in your account and it is in the money at expiration, they deliver shares. There's an exercise or an assignment that takes place. European style options work differently. These cash settle. They also cannot be exercised early. And so there's some specifics with them that work a little differently. And so each type of option, now these European style, you're really only going to find that in certain assets as well, like the index option. So if you ever trade SPX index options or RUT, the Russell 2000 index options, and so on, if you trade those index options, they European style settle. So they settle in cash. There's no stock delivery. They never exercised early. You could buy and sell. An exercise means it converts into something, but you can buy and sell your way in and out of these options. So if I wanted to buy one of them today and sell it tomorrow before expiration, that's all still available. Of course, you can buy and sell as many times as you want in either types of these. But as far as the handling of expiration, there are some little intricacies that way. Now, when we think about these differences, one of the things that happens with European style options like SPX or VIX and so on is that the expiration can be different. For example, that third Friday expiration for SPX. If you're trading an SPX index option that expires on the third Friday, your expiration is not Friday's close. It's based on Friday's opening. And that's really strange and weird, but this is always the way it's been. So if I were trading an SPX index option that expires on the third Friday in November, I know that my expiration is going to be based on the opening value of SPX, not the closing value. It's going to be based on the open. If I'm trading the VIX index options, again, it's kind of weird. When is its expiration? Well, it'll often land on a Tuesday or a Wednesday of the week. So it's basically 30 days after the prior expiration. It has some weird criteria to it. So the VIX index options, you'll usually have an expiration that's like the third Wednesday of the month, or it'll land on some, and it rotates. It won't always be that. But if this is expiring on the third Friday, heck, the VIX expiration might be on the third Wednesday. Now you'll see that in the option chain itself. And let me show you some of this. Let's go live just to make more sense of this. So if I pull up an option chain, and this is live in the markets, let's go SPX. So here's the index options. Now, as I look at these index options, of course, we're going to have expirations all over the place. Okay, there's one that expires today, and one that expires in 3 days, and one that expires in 6 days, and so on. If I go to the regular expiration, which is this Friday, that is going to expire Friday morning, not Friday close, Friday morning. If I go to the November regular option, again, this expiration is going to be based on Friday's opening, not Friday's close. Now watch something. We know that November 20th is the third Friday in November, don't we? Watch what the VIX does. Here's the VIX index options. If I go to November and look at the regular, the standard, do you see its expiration is November 17th, not November 20th? So this will expire 3 days prior to the standard, but this is considered the standard expiration for the VIX. It just has a weird midweek expiration. So there's some little intricacies that way, and those are a little bit more advanced products when you're trading SPX index options and VIX index options and so on. Most of what you're going to be trading for most traders are American style, and they're just standard. They settle with stock. Their expirations are based on Friday's closes and so on and so forth. So it's a little bit easier to kind of understand and trade them, and you don't have to know quite as many little details that way. Now, European style, like we said, VIX options will expire on a Wednesday. Your last trading opportunity is Tuesday because it's going to be settling based on Wednesday's open. For the SPX index options, again, the third Thursday is your last trading day because the settlement, the closing, is based on Friday's open. And even the settlement values can be really kind of strange. Now, you think about this in terms of if my last trading day that I could trade this SPX index option was the third Thursday. That's my last opportunity. Then the market closes. Now, who knows where the settlement's going to come tomorrow morning? There could be a news event. There could be all these things that happen that could cause the market to change dramatically. And I really am just kind of at the mercy of whatever the market does and whatever I get, right, in terms of settlement. And this is what people don't like about these, is just kind of that inability I mean, I guess you could hedge with futures and do things like that overnight, but it gets really pretty wonky. So, to a certain extent, you just are at the mercy of the markets and whatever it settles at. And then the settlement value, you can actually go to cboe.com to get the settlement value. And if you go to that website, it takes a few hours on that Friday or that Wednesday or whenever these settle. But after a couple of hours at the CBOE website, they'll actually post the settlement for each of these values. So they'll say, okay, the SPX settlement value was, and it will have an actual number. And they'll post that number. They'll say, well, the settlement value was 3,500, and 8.52 or something like that. So they'll just post whatever the settlement value is. Or same thing for the VIX. They'll say, okay, the settlement value for the VIX was 23.62, something, just some random number that is the settlement value. And what does that mean to you? They'll post these under a certain symbol. They'll do VRO and so on, and they'll post these settlement values. But basically, when they post these, it means that whatever you owned will either expire worthless or settle based on whatever that settlement value is. So hypothetically, what if we owned a 3,500 strike call? Well, if we owned the 3,500 strike call and we just held it overnight into expiration, we didn't sell it. Now, if we sold it to someone else, we don't have to deal with all this, right? But for whatever reason, we just held it and we wanted to get the settlement and thought that it was going to go higher or something like that. And it settled at 3508.52. What is my 3,500 call going to be worth? Well, it's going to be worth exactly the difference between where it can exercise and the settlement value. So it will be worth $852. In other words, $852 is going to be credited to my account based on the strike price exercising and the settlement of cash, the difference between the strike and the settlement value, right? Now, is that 852 a profit? Well, it all depends. Did you pay more or less? If I paid $10 for it when I originally bought it, and now I'm only getting a settlement of $852, of course I lost money. I lost $1.48. But if I paid $6 for it when I originally bought it, and it's now settling at $852, of course I made $252 or $252. So whether you made money or lost money is it all depends on what your cost basis is versus what it settled at, right? That's going to differentiate your gain or loss. So a settlement doesn't mean you made anything. It might have settled good or bad depending on what your original cost basis was. Same thing for the VIX. The VIX, well, if it settled at 2362, if we owned a 25 strike call, then it would expire worthless, right? It's out of the money. There's no settlement. But if we had owned a 25 strike put, then the puts would have been in the money. So the settlement came in at 2362. What am I credited? Well, the difference here. So I get to sell at 25 and it's settled at 2362. My account is credited 138 if I'm doing that right in my head. $138. Did I make money or did I lose? Well, it depends. What's your cost basis, right? If I paid $1 and now it settled at 138, I made 38 cents. If I paid $1.50 and it settled at 138, I lost 12 cents. So depends on your cost basis, but the settlement value would be the difference between your strike and what the settlement value came in at. And so again, that's posted at the CBOE website, and you can go look up those settlement values and see what they come in at. It's kind of fun that way. With that in mind, maybe it wouldn't even be a bad exercise to just come over here and show you what it looks like if you want to see how these look. So if we come in here to CBOE.com, you can actually just punch in, like if I wanted to punch in VRO, I could probably just find it. See, if I type in VRO for VIX settlement, here's your index settlement values. I probably could have typed in the search settlement or something like that and it would have found it. But here's the settlement values, and you can see we've passed September. So here's what all of these different products settled at, and these are European style. So the S&P 500, the set value, 3353.60, that's what it settled at in September. That's the third Friday morning open. SPX settled at 3353.60. Here's where the VIX settled in September, and so on. And they would have quarterly settlements. There's some weeklies. There's, end of months and so on. When there's an expiration, there's going to be a settlement value, and you can look those up there if you have any questions on that. So kind of fun. Little intricacies there about those European style options. End of the month, quarterly and yearly, again, there's different types of expirations. So we talked about the quarterlies are at the end of the last trading day of March and June and September and December. Leaps are those long-term equity anticipation securities. Let's again do an option chain for fun and just show you a few of these. So if I pulled up, let's pull up IWM. IWM is an ETF for the Russell 2000, right? So if I wanted to trade small caps, I could trade the IWM Russell 2000 ETF. This is a basket of small caps, but it'll run the gambit here. It'll show you some different things. So notice here's an October 30th expiration. That's the last trading day in October, and that's considered a quarterly expiration. It's the end of quarter. And if we looked here, you'd have a December 31st. See, that's the end of the year or the end of the fourth quarter. Here you can see the end of the first quarter of 2021. There's an expiration and so on. Those are your quarterly options. End of the first. So this is the end of the fourth quarter, end of the first quarter, and so forth. Now, where are your leaps options? Well, here, if we keep going out, we can get to the leaps. And I mentioned that usually there are January expirations. So see how there's a 2022. So the third Friday in January of 2022. Third Friday in January 2023. That's the standard. Usually they'll have those January expirations. And that's true, excuse me, that's true of individual stocks as well. If we look at something like Target, Target is a stock. It won't usually have all the quarterlies. See, there's not an end of December. There's not a quarterly expiration, but it will have the leaps. See the leaps options there? January 2022, January 2023, and so forth. So you can see how those work and operate. Now, as we look at an expiration calendar, there seems like there's a lot going on here. Again, you can download this calendar. Not a bad idea to do that at the start of every year. So go in and download the 2021 calendar from CBOE.com to prepare for next year or what have you. You can still go in and get the 2020 option calendar to help you through the rest of this year. And it just breaks down different expirations and shows you, first in red, your third Friday expiration. See all these red dots? Every month, there's a standard expiration. Not everything exists every month, but those standards do. Then you have last day to trade expiring standard AM settled equity index options. So this is the last day you can trade those that settle based on Friday open. So see how it puts them in orange? Here's your last day to trade those SPX index options, for example, because the settlement is Friday's open. Last day to trade the VIX. See, it's going to fall on Wednesday expiration, so the last day to trade the VIX is on the Tuesdays and so forth. VIX options standard expirations the next day, so it kind of has that little green or kind of yellowish color there. SPX weekly options, well, this would show you expirations that might land on a Monday or a Wednesday or a Friday. You've got leaps options out there. Here you've got exchange holidays in purple. So if you're wondering when our next holiday is that the market's closed, right there for Thanksgiving, and right here for Christmas is on the calendar, and so forth. Here you've got those expiring all over the place options in gray. So notice all the grays on the Mondays and the Wednesdays and the Fridays and so forth. And then last but not least, you've got VIX weekly expiration, and sometimes there's some of those. There's a black mark right there for that VIX expiration. So you can download that calendar at cboe.com. Kind of helpful that way and kind of fun. Some of these will have end of month expirations, and you can see how, those are highlighted as well. So we've talked about understanding short-term expirations, monthly expirations, the differences between American style and European style options, and even explored the leaps, which typically land in January expiration time periods. Hope you've enjoyed this. Have a great rest of your week, everyone, and we will see you next time. Goodbye.